Next, we're going to look at the statement of cash flows, which is the third statement. Balance sheet, income statement, now statement of cash flows. And it's my favorite statement. I know it's silly to say I have a favorite accounting statement, but it is because it exposes things. It tells me as a user where's the money coming from and going to. And it splits out not by revenues and operating expenses, as does the income statement, but it separates into three different categories. The first are operating, second investing, and third is financing. So these are the ways that money moves in a company. Operating is from running your business. Did you make money or not? In this case, oops, it's negative. That means Under Armour, even though it makes a profit, is using money to grow its business. That's what negative 44 means. Investing is also negative. That means, oops, Under Armour is spending $800 million a year investing in long-term assets, mostly in their case, factories and distribution centers. The last is financing. Financing is, okay, finally, we see a positive number right here. So what does that mean? It means that Under Armour had a lot of cash. They started with $593 million, and they went on this big growth spurt to grow their company. And the cash they had was not enough to pay for their expansion. So what do? They sold more stock, right? So in this particular case, this one statement tells me a lot. First is that it tells me even though Under Armour is profitable, it's growing so fast that they need continuing investment from investors, whether they're bondholders or stockholders, to support the growth of Under Armour. So this one statement actually tells you quite a bit, and there are only half a dozen numbers here. So the statement of cash flows, as the name implies, deals with cash. Where did the money go, and where did the money come from? Here, the money went to grow their operating business, the money went to grow their fixed asset base, and the money came from the support of investors, either through bond, which is a form of debt, or from stock, which is kind of traditional equity or risk-taking investors. All right, next let's look at the so what for a statement of cash flows. And as mentioned earlier, the basic question is, where did cash go and where did it come from? The first pass that I always do is not look at the bottom line, as I might be tempted to do in the income statement. I look at the subtotals, right? First pass is operating, which is from running the business, investing, which is in long-term assets. Are they building long-term assets? And financing. Are they selling more stock? Are they getting more loans from bankers or bondholders? And those are three things. That's first pass. Pretty simple, three numbers. Second pass is I'm looking now deeper. So I'll go into operating as a group. And I'll say in operating, did they have positive or negative net income? Let's just start there. Did they return a profit? And then other than that, what are all the other things that it takes to run the business? Adding inventory, paying their bills, collecting money from customers. All those are cash things related to running the business. The second set is on investing. So on investing is, where did that money go? Is it a negative number, in which case they're investing money? And if it's a negative number, where did it go? Did it go into building fixed assets like factories and office buildings, or did they buy securities? They could have invested in buying stocks in other companies. Companies that are wildly successful will have extra money, and they often park that money by buying bonds or other investments in other companies, just to park the money, earn a little return while they're waiting for another massive use of their own capital. And that's what I'll find from investing. Mainly two things: fixed assets and securities portfolio. And then the third group is financing. So we saw in total, but how did it happen? We have one net number, but it could be offset by pluses and minuses. So did they borrow money? And this could come from a bank or from a bond holder. Did they sell stock, or did they buy back stock? Those are transactions having to do with financing. And then did they pay dividends? So these are things we see, again, on the financial statement that is called statement of cash flow. Very important statement. Most people don't look at the statement. In my experience, everyone looks at the income statement. Some people look at a balance sheet. And not enough people look at the statement of cash flow because it's not hard to understand and it's very, very insightful. And some people also look at the statement of stockholders' equity. So most people, when you say, what are the statements? They'll say balance sheet, income statement. That's technically not true. There are four, not two.